Happy Friday, everybody. It is Friday, the 8th of June, 2018. It's 8 a.m. Chicago time, 9 a.m. Eastern. It's the end of the week, and what a fast week this was. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, seeing a lot of red. The only products that I monitor that are positive this morning are the Bund, which is a safety asset, the dollar, and the yen. Surprisingly, well, the 10-year note is unchanged. Of course, those are trading September. And the bonds are down one tick, so they're teetering on just possibly being positive. Gold is down just 6 cents or 60 cents, 70 cents. Everything else is down. Crude oil is down 21 cents or 0.32%. The laggard today is the NASDAQ. The NASDAQ getting hit by news from Apple. I believe Apple's down a little over 1%, maybe. I don't have it in front of me anymore. But the NASDAQ is a drag as it was yesterday on yesterday's trading. So that's where we stand this morning. As far as what could interrupt our auction in terms of releases, 10 o'clock Eastern, 9 Central, that's when we get wholesale inventories, the final for April. This number really doesn't have much weight. Other than that, it's clear into the weekend. There's a lot of chatter this morning on the news feed. President Trump again on Twitter talking about Russia needing to join the G7 meeting, and further chatter about tariffs and retaliation for these trade wars and things like that. Something to keep an eye on, of course. So let's take a quick look at yesterday's action. I'm only going, well, let's do it the way we've always done it. So the primary scenario was looking for a dip into the prior day's range to retest that point of control, potentially all the way down to 27.73. Remember, I'm quoting and trading September starting yesterday, so all my prices are September prices, which are going to be about 3.75 points higher than your June prices if you're looking at June. So you'll have to make that adjustment. I was looking for it to dip down and then for the main push to be higher, looking for 27.91 as a key target. Did not happen at all. This didn't play out. What did play out, though, really well, which frankly just didn't take advantage of, is an open auction that pushes just above the prior day's high to somewhere around 27.85 is drawn here. And then we start to move back into the range and we dip down into 27.67 or so. As I drew here, this line right on the edge of this low volume node from the prior day, from Wednesday. This scenario worked out almost perfectly. Again, I can't say I traded it very well. Let's see. Here's what we actually got. Lots of rotations yesterday. See, this chart looks noisy with all these rotations on it. Lots of rotations. So there's a lot of back and forth. Yesterday, open auction, dips down, pushes up to 27.83 just short of our target of about 27.85, and then proceeds to move lower. And we have pretty much the same kind of formation as expected. Here's what I expected. See that formation right there? Right there. We've seen that formation a lot. And then it breaks down into the prior day's range, tests the prior point of control, pulls back to the mid on the dot, okay, for continuation trade. And we did get the continuation trade into the low volume node that started at 69.75. Dipped in there by 2 ticks and then came all the way back and a very deep push into the current range, all the way back up to the opening print, which is this green line right here, these green dots. That's the opening print. And then it proceeded to just continue lower until it reached the middle balance of Wednesday. I can't say that it was predictable. Yesterday was a great price action trade. It was a really good scalp. But trading setups yesterday was not without its pitfalls. For those of you who attended the public AMA, which is going to be published today and sent to you if you registered, it'll show up in your email as always. We don't spam email; we just notify you when things are going on, and you can always unsubscribe, of course. Here's the pullback to the mid, and as I said yesterday, I didn't trade this well. I took 2 losses right off the bat. Saw some strong indications that this would likely flag and continue higher for scenario 1. Ended up failing. And so managed to catch the drop, I believe, down here. No, actually it was down here. And pulled back and then continued higher. Yesterday's profile had a weak high, had a poor low. Look at these multiple lows here. Weak high, weak low, somewhat balanced in the middle. The value area is okay today. The overnight high is right at value high. And so today is likely to be a selling day as we balanced as we start to rotate down and open below value. Okay, the point of control shifted down slightly yesterday. The price action was higher high, higher low, but value has shifted down compared to the prior day, and we're opening lower. So I expect today to be a balance-ish day with a downward skew. That's the key plan. And then looking at the overnight, I hate seeing these gaps in here. All right. Come on, bro. Okay, so we open through the Asia session, pretty tame, and then we start to roll over and sell off into 27.55.75, which is deeper than I would have expected. I would have expected 27.60 to shut the door on the sellers, at least on the first test, and it held down there pretty good. It pushed it through there pretty good, and then it came all the way back, walking right through the mid. You can see this HVM building here, 2760s, that naked VPOC, and it's a high volume area. And so it's just building on that. So the overnight session is telling us no consensus on price discovery all the way through. Really wide range for an overnight session. We go from 27.55.75 to 27.78. Approximately 23 points, 22.75 points. That's relatively wide. So there was a lot of price discovery in the overnight session. We can see that there was really no consensus just yet. So what the overnight session is informing us is that there was some pretty active pushing by the sellers, and buyers came in into the European session, later in the European session, to push prices back up. So overall, the overnight session is saying there's a fair amount of activity. Now, where are we opening today? We're opening at 27.60, 69, 68.75 or so. We're opening. It looks like we're holding steady right now. We have 20 minutes to the open, so a lot can happen. But right now, we're holding below yesterday's point of control. The expectation for today on the primary scenario is that you would hit the like button. It's like Friday, so just hit the like button, please. Make sure you take a moment to do that before we continue on, or after the broadcast. Take a moment. Doesn't take you long. It may require you to log into your Gmail account or into your YouTube account to be able to do that, but I'd appreciate if you did it. Anyway, I'll stop tricking you. I expect, since we're opening in range just outside of value, chances are we're likely to drift back a little bit into value. I expect an open auction. I do expect to push into 27.73 quarter, yesterday's point of control. And then I'm expecting it to fail back down. I'm looking for exploration of this range today. I'm looking for this range to be tested today, Wednesday's rally. So I'm looking for an impulse down with a continuation down through the low. I'm looking for a test of 27.60 again. Consolidation to continue down into the overnight low and then to bounce into the close. If not, then it's likely to test through Wednesday's low, and that's likely to bring in quite a bit of selling before it punches back up. This is the primary scenario. Okay? So that's where scenario 1 lies. Scenario 2, we immediately continue the selling from the overnight. I expect a choppy drift down. Just not seeing a huge incentive for, or a huge reason for it to push down, although that could happen. Looking for it to break through the 63.75, push down into 60, bounce around, come back into the range, and then ultimately get back into the point of control, consolidate, and hold steady, so that we would likely end up with a distribution that looks like this. By the end of the session, lower high, lower low, lower point of control, and the beginning of the retracement on this market. In this current run, we've been in a bull run, pretty good bull run for a couple of weeks now. And yesterday is the first time it showed signs that it's starting to weaken a little bit. Notice these points of control just go higher, higher, higher. Here's the point of control. It's the maroon line, higher, 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 and then yesterday lower. Okay, so that's what the two main scenarios are. That's all I have for you. Now, I can't leave you on a Friday without reminding you that hopefully you won the week, that you did something, you set goals for what you need to do in your process this week, that you would master, and that it's Friday, the last day of the week, and you're doing what it takes by the end of the week to win the week. And then, of course, if you're not doing that, don't be surprised that there's no progress. You really need to set some goals, and you really need to go after them to be able to see some progress. It's just in any performance endeavor, you're going to need to do that. So what are your goals? You don't have any. Okay, well, it's time to work on that. So after the trade today, or when it slows down, go look at your numbers, go look at your performance, go look at your P&L, and figure out what things do you need to do to improve it incrementally by a small margin, and focus on that next week. And like I said, unless you're doing that, there's really not, you should not be expecting any improvement. The second thing that I wanted to point out is it is Friday, and you're likely to get emotionally involved with the trade, and it's rollover and expiration. So over the next week, patience. There's going to be a lot of calendar spreading, a lot of delta hedging, a lot of chop. So be careful, pinning, all these things that happen over expiration week. Be careful. Expiration week is traditionally the week that I take off. If I don't, I'm trading very, very light and very selectively. It's in the last, what is it, 15 years or 16 years of trading futures. This is the week that where I perform poorly. My expectancy during rollover week overall is flat to slightly down. So recognizing that, I just ease off. I suggest you do the same. Good luck.